Welcome everybody to Stock Talk with Nico Criticos. Today we're going to be going through Boston Beer Company, ticker SAM. And before we get started, I do want to point out that if you're not already subscribed, you just need to know that when I hit 1,000 subscribers, I'm going to be giving out several prizes to a couple of random subscribers. So if you're interested in that, make sure you subscribe. So Boston Beer is a company I started buying last year in September. Okay. And we're going to do some review of their latest earnings report for Q4 of last year and for 2021 in its entirety. And then we're going to look at the stock price action. I'm going to point out a couple other things that I see going on and some positive things I see going for this company going forward. So let's start off with their stock price. So I started buying this around $550 a share. Okay, it's come down a lot since then, and I've averaged down. My new cost basis is down to $480. So I've gotten it down pretty significantly. Still this stock is still falling so much from its highs of last year at $1,300. This stock is now down to $392 today. I believe this is right around a 52-week low. And if we look at the 5-year, you can see even years ago it was trading around these prices. In 2019, it went up to $438, and then it spent a lot of time around $380. So think about, they've made a lot of progress since then as far as their sales, as far as their brand recognition. This company owns so many famous brands. One, Samuel Adams. They do the Oktoberfest beers. They do Truly Hard Seltzer. They do Angry Orchard. They do Dogfish Head, and they do a Twisted Tea as well. So they have tons of famous brands, and I think they're one of the most successful, fastest growing craft beer companies out there. Not only do they have other things coming out this year too that I want to bring up. So where is it? Let's go with not this. If we type in Hard Mountain Dew, we can see that them and what's it called? Boston Beer and Pepsi partnered to make this Hard Mountain Dew, and right now it's out in 3 states. I believe Iowa, Florida, and Tennessee are the only states that have this product now, but it just came out, and I think there's like 5 different flavors, and it looks like it's having pretty good success so far. So you can see on February 22nd, a couple of weeks ago, it came out. And now I would think they're going to start rolling it out across the country, but I think this is going to be a huge driver for this company and the money they make in 2022. The other thing that they're coming out with, I heard about, this came out back in fall of last year, is they're partnering with a company called Peak something. Where is it? Peak? I'm not sure. It's a Canadian company called Peak Entourage Health Partners or something. They're coming out with a non-alcoholic beverage that has cannabis in it. And of course, that's why, marijuana is more, Canada is a more marijuana friendly state. So that's why they're rolling it out in that country. But I haven't heard any news lately about this. As you can see, when you Google it, nothing, the latest articles are still from last fall. So I'm thinking this hasn't come out yet, but it is supposed to come out at some point this year. So those are the 2 new innovative products they have coming out. And if we look at this, I found this very interesting too. So actually, before we get to that, let's look at, we're going to look at this first. We're going to look at, this is their latest earnings report. So the reason the stock, if you're asking yourself, how did the stock go from $1,300 to $390? The reason is because in the pandemic year, a year ago, hard seltzer was becoming incredibly popular. And I think it grew around 200% at one point. It was for last year, I think it was up 200%. And then now it's fallen by, 10%, 15%. And so there's been a drastic change in demand for these hard seltzer products, specifically their Truly Hard Seltzer, but also White Claw. And what I read about in their report was that they actually ended up being, I think they were number 1 in market share for hard seltzer. So the Truly product was still successful in the market. The market was shrinking. That was the problem. So they still became number 1 in the hard seltzer market. It went down. And so that's why the stock has fallen so much, because they had to sell millions and millions of a product and they had to sell it at a loss. So that was the big problem. And I remember a couple months ago, they said they didn't want to sell it for a discount. They just wanted to completely throw it away and just take a loss on it. So that's unfortunate, but I think they wanted to do it to keep their brand appearing as a reputable brand that is high quality. So anyways, if we look at what this cost to the company, we can see there was a fourth quarter net loss of 51 million, which decreased from the previous year of $32 million of profit. So big difference there. And how it says here that Q4 net loss was driven by previously disclosed shipment decrease that resulted from a more aggressive wholesaler inventory reduction than expected, primarily affecting Truly Hard Seltzer. So there wasn't, wholesalers they already had inventory of the seltzers. They didn't want any more. Full year shipments increased 15%, right? Full year depletions increased 22%. So once again, too much supply, not enough demand for the product. Full year net revenues of $2 billion. Still, it increased from 2020, a little over 18%. Okay, so it wasn't horrible. If you want to see exactly what their revenue was doing, so here's the expectation. So we have, last year they did 2.06 billion. This year they're going to do 2.2, and the next year they're going to do 2.4. So right around 8 to 9% growth per year. And as you can look at EPS, for last year it was $1, and this year it's supposed to be 14 and then 18. So EPS is going to skyrocket now once that hard seltzer problem is out of the way. And if we want to look at revenue compared to 2021 or 2020, we can see here that, so revenue still grew. That's what's awesome here, is revenue was still high. Revenue went from 1.7 to 2. Just the earnings got hurt. Profitability got hurt. Went from 191 million in 2020 to only 14 million. But that's going to come right back. That's going to come right back. And I think this stock will be back up at, I know I said it before. I said it in the last video I made too. I said $600, but it's eventually it's going to go back up there, because this is not a slowing company. This is a growing brand, and they own some of the strongest products in all these different categories. If we go back to that, we can see same thing there. Too much inventory. Here's some other things I highlighted. Twisted Tea was the fastest growing of the top 25 brands in the Q4, with 31% growth in measured channels. And Samuel Adams was the fastest growing national craft brand. That's pretty good there. And let's see if there's anything else. So gross margin for last year was 38%. And then I think I highlighted down here that gross margin for this year is expected to be about 45 to 48%. The margins are coming back. That's going to help with EPS. And they're guiding for EPS of $11 to $16, which is a huge range for this year. And see, they even said the earnings per share could vary significantly from the current projection. So who knows if it's going to come in at $8 or $20? Who knows what's it's going to be? But what we do know is it's most likely going to be a lot stronger than the dollar EPS they put up for last year. Now here's the next thing. So now that we know that the hard seltzer demand was not there, I went ahead and went on Google Trends and wanted to compare the search volume for Angry Orchard, Budweiser, Samuel Adams, Twisted Tea, and Truly, right? Well, see, actually, let's see, what if we did, so off of this graph, Truly looks the highest, right? But it looks like that is there. If we do this, Truly Hard Seltzer, then you see where it's fallen so much. So that was probably because there was just the word Truly. But so as you can see, so red is Budweiser. Of course, that's one of the most well-known brands, so that's going to be the highest. But if we take that off, and you can see in comparison how much less recognition these other brands have, right? But if we take this off, now we can get a closer picture of, and of course there was a spike. See, let's see. I'm not sure. There was a spike in February because of the Super Bowl, right? But this spike, I'm not sure. This is September 20th. I don't know what happened there, but Sam Adams skyrocket. Could be maybe for Oktoberfest. I don't know. But so it looks like their most searched brand is Twisted Tea, right? That's what they said. They said Twisted Tea is the fastest growing. Then it's Samuel Adams, and then it's Angry Orchard. Angry Orchard might be a little bit less. Looks like Angry Orchard and Truly is more towards the bottom, and then Twisted Tea and Sam Adams is up higher. So it's good to know what brands are more popular. And then here we have, this is something that's kind of interesting, not very, I don't know, I would say not a good sign probably. This is Boston Beer's insider trading activity. We see sells the last 6 months, but we don't see any buys. And that's the problem. Why aren't the insiders buying these shares at under $400 a share? I'd also be curious to know what percent of shares do the insiders own? So this is a $4.8 billion company today, and they're doing over $2 billion of revenue. So insiders only own 8%. That's like average. That's not great, but it's not bad. So we have a $4.8 billion company, $2 billion of revenue, and how much equity are we getting? I think it's under $1 billion, I want to say. Let's see, we have, yeah, or right around $1 billion, right under $1 billion. So not too bad. It's if we look at the metrics, the valuation metrics, the PE is super cheap compared to where it was in the past. It was at a 45, a 55 a year or two ago. Now it's at a 24. So it's come down a lot, and a price to sales of 2.3 when it was a 7 and an 8 in the past couple of years. So that's why the valuations come down so much. I think this is a pretty, I feel confident putting my money here because, how I said, they have multiple of these super popular brands. They're growing faster than most beer brands out there. And that's why I think at this valuation, it's cheap, especially with EPS coming back as much as it is. I think this is a great, I think we're at the bottom. I really do think 390 is the bottom. I don't think it'll go below that. So that is my outlook and analysis on Boston Beer Company. I believe I own around 5 shares of the company. So yeah, I'm going to say this is going to be back to at least, I would say $600 within a year. So I'm going to say $600 by the end of this year. So yeah, thank you for watching, and don't forget to subscribe. I will see you in the next video.